Hey, this is Nick from Income Digs. Welcome to this video tutorial. Today, we are getting into QuickBooks Online, and we're specifically talking about preparing your profit and loss report for taxes and this common problem that a lot of us have when we're converting from accrual-based accounting to cash-based accounting. QuickBooks does this really smart thing, and it does this thing called Unapplied Cash Payments, and it confuses the heck out of us, okay? And I want to talk through how it happens and how you can, still report to your accountant, to your CPA, and understand what it means so that you can communicate it to them, all right? So what we're going to do is we're going to be looking at a profit and loss for 2019. And we're going to be messing with the information a little bit to kind of make things pop up, and so I can demonstrate why they do. And then we're going to talk about how we can report that back to your CPA. Okay? So join me here within QuickBooks. And what I'm going to do is I have a profit and loss. I'm going to pull it up for last year. Now, if you're like me, you manage your business, your day-to-day in what's called accrual-based accounting. And just as a refresher, accrual-based accounting means that you are reporting on the date of the transaction as opposed to the date of cash being transferred. Okay, so what that means is if I were to invoice a customer, the date of that invoice would be what pulls up on a profit and loss for accrual-based accounting. If I was doing cash-based accounting, we don't care about when the invoice was created. We just care about when it was paid, okay, the date that it was paid. All right, so now again, I use accrual-based accounting to run my business, to run my day-to-day, to look at my reports and to understand who owes me money, who I owe money to. But the IRS only recognizes cash-based accounting, okay? So what's nice is that QuickBooks has it so you can just kind of switch back and forth, but if you're used to using accrual, it might get a little confusing sometimes if you were to do cash-based accounting. All right, so what I'm going to do is demonstrate that today. So I have my profit and loss sheet up, and by default, because I run my business out of accrual, it's on accrual, okay? And I don't have any issues with this right here. I could kind of send this to my accountant, and I have, here are all my properties, here's my income, my cost of goods sold, and then my expenses, okay? I could do that. Now, one thing I'm going to say on this is that you would want, if you're following my technique, that all of your property-related expenses are called cost of goods sold. And notice here, property insurance is showing up down here. So what I'm going to do real quick here is go to my chart of accounts, and I'm actually going to change property insurance to a cost of goods sold. So keep that in mind because you can switch them back and forth. Now, I suggest having them as cost of goods sold, but some accountants, some CPAs like it to be as expenses. And so if that were the case, you could switch it temporarily to give them the report that you want, okay? So what I'm going to do is I'm going to go into that property insurance and just switch that back to a cost of goods sold. All right, so here it is right here. I'm going to go here and edit, and I'm going to make it cost of goods sold, and I'm just going to do cost of services, save and close. Okay, and then if I refresh my P&L, that property insurance is going to move back up to the cost of goods sold. All right, not specifically the point of this video, but it is important to know that you can switch those if you need to. There's the property insurance there. Okay, so again, here I have an accrual-based profit and loss for 2019. So if I'm preparing for taxes, I can switch that to cash and click Run Report. Okay, and in theory, everything should just be what it should be, meaning that the profit and loss report is now picking up on the date of payments as opposed to the date of invoices. Okay, however, when you do this, sometimes, and actually for me, it's actually quite often, we have this weird thing called, on the income side, we have unapplied cash payment income, $950, and then on the expense side, unapplied cash bill payment expense. Now, if you're like me, you see this and you say, what the heck is going on? Like, what is this? For one, it's not assigned to a property, and there's really nothing I know about it, okay? But if I drill down, let's kind of investigate what is going on here. Okay, I can drill down and I see that there's a payment on 12/31/2019 for $950. Okay, well, what is that a payment for? And if I drill into this further, I see that I have an invoice for 1/1/2020, okay? So what's happening here is that my invoice date is 1/1/2020, and Bernie, my tenant, is awesome. He paid me early, right? He paid me on 12/31/2019. That's when the cash got exchanged. So what QuickBooks is doing is it's saying, hey, your invoice is for 1/1/2020, so you don't have that. This invoice is not on your revenue line, okay, because it's 1/1/2020. However, you got paid, and the IRS needs you to report that income because it hit in 2019. You don't really have a choice, okay? You received that payment. All right, so now it's giving you this unapplied payment, and honestly, it is really smart. It's frustrating because you kind of want everything to look nice and neat, but that's where it's coming from, okay? Let's look at this unapplied cash bill payment. What the heck is this one? So if I drill down into this, it looks like, okay, on 12/31, I made a bill payment for $15.86. Let's drill down into that further. And oh, it's like the same thing. It looks like I had a bill from Lowe's for 1/1/2020, and I actually paid it early. Okay? So that's kind of neat. I paid it early, and what QuickBooks is doing is saying, hey, you paid that bill early. You should get credit for that expense in this year's taxes. So it's putting it on there. If I didn't pay it until 1/1/2020, it'd be on the 2020 tax return. So QuickBooks is saying, based on the dates, you should include this as an expense. Okay, so that's great. So what do we do with this information? Okay, well, my philosophy is I don't like to mess around with dates too much, meaning we could adjust the dates of the bills so that it's no longer unapplied. So like, for example, this invoice, we make it a 12/31 invoice. We could do that, and I'm going to demonstrate that to show you how it falls off. I personally like to have the bill date and the invoice date as what it should be so that I don't mess up my accrual side of the accounting. All right, so if that's the case, what I do is I try to learn what these things are, and then I just annotate my profit and loss so that my accountant knows what they are. So I can take this here and see that this invoice, I could just kind of look at what this is, and it's for 123 Main Street, right? So I can go back here, and let me do the same for, and you know what? I know this already, that this bill is for 34 long. Okay, so what I would do, and this is exactly what I do with my own books, is I'll export this as a PDF for my accountant. Okay, and let's make it look a little nicer. Okay. That's a little bit better. All right, so I'm gonna save it as a PDF. All right, and then I'm going to just do a really quick annotation on it. Okay, so there's my profit and loss. I'm going to add in a rectangle. Now, if you don't have a Mac, that's okay. You can do this in like Adobe or anything like that. Or you could do like a screenshot. Or, you know, you could just kind of print it and write on it too. You don't have to be too technical with it. All right, so I can grab that, and then maybe I'm going to, we'll add some text, and I'll say 123 Main Street rent. All right, and we'll make that green as well, and then let's annotate and let's add an arrow. And why is it white? I don't know. Okay, so that way I haven't messed up with QuickBooks at all. I don't want to try to like manipulate it too much, although I will show you how to do that. But this way my accountant can just take this and put it over to 123 Main Street. Okay, and then likewise, I can come over here and say, I'm just copying these over. I could say, you know, what was this? This was 34 long repairs. And then this profit and loss can kind of go to my accountant and they'll be all set. Okay? So that's kind of how you can deal with it. Now they can be hard, you know, they're not always that easy to track down, but just knowing where they come from will help you do that. So let me just talk through one other way that you could deal with this. And again, this is not my favorite way, but you can potentially do that depending on how you do your books. But So this invoice was paid in December. Again, there's nothing I can do about the fact that they pay me early. I need to recognize that income. But what I could do is I could adjust the date of my invoice so that it's no longer seen as paying early. I can basically take this invoice, you know, you could keep the due date there, but I can make this a 12/31/2019 invoice. Again, this will throw off your accrual though. So if you're managing your day-to-day in accrual, you probably don't want to do this, but it is a way to get rid of it. It goes into the right place. With bills, maybe it makes more sense. I don't know. With me, with revenue, I'm really strict on, I want to know my revenue per month. With bills, things that are changing a little bit more, I would probably be a little bit more flexible and say like, hey, maybe this bill was due on, or was a 12/31/2019 bill. But again, don't go crazy with this because these are records for your business and you probably want them to, actually, what did I just do there? All right. And now it's showing up as a unapplied. All right, so let's just go back here. Let's see what's going on. So now it's showing up as negative 1586. So I got to look into this. What is going on? My unapplied cash bill payment. All right. Let me just see. I don't think the due date matters, but let's just. All right, let's just see what this does now. I might need to delete the payment and redo it. So, oh, there it is. No. Yep, so I'm going to just delete this payment and redo it, and hopefully that'll clear that.
Interesting.
All right, so I got an issue here where my invoice is, or my bill is not, so I might have to delete this whole thing and then recreate it, which is what I'm going to do. Because I'm not sure why this is tracking as a negative, but this is why, like, I'm not in cash accounting all the time, and so this stuff is a little bit weird. But just, again, understanding where they come from is kind of half the battle. Okay, so let's just try that again. Let's see if I have a bill for Lowe's for $15.86. And let's go 12/31/2019, and that's for 34 long. Okay. And then on my expenses, my bill payment, I'm going to make a payment of 12/31/2019. Now, the good news about this, right, because what I'm doing here is pretty annoying, but we're talking about year-end stuff, right? So we only have to do this stuff like once a year. So it's not too crazy of a process. So here's my P&L. If I do it by cash, let's see if anything's showing up there. All right, so I'm in the clear. So that was kind of weird. I'm not sure why it didn't just fix itself when I edited it, but I was able to recreate it and I'm clear. So now I have nothing in those unapplied buckets and everything is showing up where it needs to be. Now, another thing that you might do at year end is kind of do an allocation. So right now I have like 1161 in electric. And this would happen if you're kind of throwing things into buckets throughout the year. You don't know what properties those are on. So you could then distribute this among your properties. And that's kind of a separate video that we talk about those allocations. All right, so if you are doing accrual-based accounting, you need to switch it over to cash for your IRS reporting to give your reports to your CPA. It can get a little bit confusing. These unapplied bill payments, unapplied invoice payments can get a little confusing. Just know it all has to do with the dates, okay? So if you drill down, you should be able to find the root cause, and then you can tell your accountant where it should go. All right, so thanks for your attention on that. That's a little bit more of a complicated one, but we've been getting a lot of questions on it. And we're actually adding this as supplemental material to Real Estate Accounting Bootcamp, which, by the way, is our end-to-end real estate accounting training course that is available at incomedigs.com, along with several other free resources and tools. Okay, so check it out there, incomedigs.com, and I will see you on the next video.